What's going on, ladies and gentlemen? Welcome back to another episode of Lando Trades. Today, we're going to be reviewing a Euro USD short that took place today, Tuesday, December 17th, during the New York session. So let's dive right into it right away. Starting on the daily time frame, right? We want to know a couple of things here. I'm not going to go into the specifics and how to actually identify these objects, but this right here, this is a bearish order block on the daily time frame, and it ranges from this candle's open up into this candle's high. Okay, so this was the top of the bearish order block, and this here was the bottom. So these are daily candles, obviously, and we're looking at December 14th today. And we're going to see why it played up to that order block and why it played down and closed lower. There's some take profits and sell side liquidity here and here, which are our weekly targets for the week as of right now. But let's go into the intraday chart and see what happened. So leading up to the session today, the session starts right here at 7 a.m. New York, this first bearish candle here. We had quite a run up during the European session and the London session. And what that actually did, if I'm not mistaken, so this high was 1.13240. This high was 1.3238. So it wasn't as high, but it looks like it definitely obviously took out this semi-significant high and took out some liquidity around here, although there's still a little bit resting up there, but took out some liquidity of this significant high as well, especially going above the high of the open right there earlier this week. So when we ran up on that liquidity, I was looking for some sort of reversal to happen within this price action here within the beginning of the New York Open. And we got exactly that. So I was looking at a 15-minute time frame. And let me take this off for a second. I was looking at a 15-minute time frame. And so the open of the sessions right here, I'll just draw a line. It'll be helpful here at 7 a.m. And so at 7 a.m., I was looking for something to happen in here that would enable me to get in short at an optimum price coming out of this bearish order block daily. And I actually ended up going down on a 5-minute time frame because the price action was kind of weak. I didn't like the candles it was forming, so I wanted to see something on a higher time frame. But essentially, this is the concept that we were trading off of, right? And we probably a 15-minute might show it better actually for now, but what ended up happening was we made this significant high right here, right? There's no higher highs to the left or to the right. It's just lower highs to the left. And so when we broke down the swing, so this was the swing right here that led to that high, that significant high being formed. So this was the swing. We were looking to play below that swing, which we ended up doing right here when we closed here at 7:45. So at 7:45, my mind was triggered into looking for a short entry. We had an order block confluence up here with this green candle on the 15-minute. Well, it could be a couple other things over here too in terms of order block, but this could be order block confluence. But essentially, we were now playing in this range from this high all the way to this low, right? Because we swung right here. So when I drew out the fib to look for an entry I was on the 5-minute actually, but I was looking at this range from up here. I'll zoom in for you. Hold on. Computer's giving me all sorts of trouble. That's awesome. So we were looking from these candles, these swings, they're high, and we were looking to the lows of these candles. And we came up into a perfect, and I mean down to the pipette at 1.13171, retracement at 62%, and then boom, we played out. And we actually played multiple standard deviations lower, more than just 2. We actually ended up playing about 3 and maybe even 4. But a significant example of how you can take a small range of price action and it can tell you a lot from a higher time frame, break it down on a lower time frame, and take advantage of the longer term move. So make velocity your friend, right? This risk here on this trade was, let's see, 5, 6. So we risked 11.6 pips. Okay. And then obviously we broke even when it hit 0, but we risked 11.7 pips, and the total outcome of the pips on the trade ended up being max like 50. And now even more, if you had held the trade all day, you'd be more at like, 60. So when you think about risk to reward, it's not always the initial trade that you have on. Okay. If you know and you understand price and where it's headed to in terms of liquidity and what it's targeting, you can frame your trades and your scaling profit strategy in a way that enables you to catch these long moves with much more velocity. But just a great example of a trade that played out well in our favor, hitting to a perfect retracement and then moving lower. I think my entry was 1.165, so like a little bit lower here. But there we go. I made pretty smooth sailing there. Now, if we're looking at the daily time frame, right, we're looking for it to take out this day's liquidity. So now today, we have another opportunity to possibly go short before Thursday's possible reversal. So we're looking to take out liquidity at 1.12275 tomorrow. So that's all I got for today. Thank you guys so much for watching. If you have any suggestions, please throw them down in the comments. Please hit the subscribe button if this was helpful. I'm going to keep posting more and more, so I'm going to keep the content coming, and let me know what I can do to help it make it better for you all watching. But thanks for watching. This is Lando Trades, and we'll see you next time.